Dividend stocks are one of the best ways to invest your money because they typically offer a high dividend yield. Rather than reinvesting profits back into the company and growing its operations, companies tend to pay out dividends to investors as sort of a bonus for investing in their business. However, this isn't always the case with every stock. Some companies don't pay any dividends, others have small yields that barely register as an investment opportunity. That's why it's important to know how to invest in dividend stocks if you want to take advantage of this type of investment opportunity. A dividend stock is a stock that pays out a portion of its profits as a dividend. The dividend rate varies depending on the company and the industry it operates in, as well as the overall health of the business. There are two general types of dividend stocks. The first are cyclical companies, which include companies like manufacturers, utilities, and transportation companies. These companies typically pay out higher dividends during the good years when they have a lot of cash on their balance sheet. Then, during the bad years, they reduce or even stop paying dividends entirely. The second type of dividend stocks are defensive stocks, which include companies in industries like healthcare, consumer staples, and utilities. These companies typically have a much steady stream of income and typically pay out more consistent dividends throughout the year. So now we're going to get into how to invest in dividend stocks. So you want to choose a company that has a proven track record of paying out dividends. Dividend stocks that have been consistent payers for decades are typically safer than companies that have just recently started paying out dividends. It's also important to look at the dividend yield, which is calculated by taking the dividend paid to the shareholders in a year and dividing it by the price of the stock. The higher the dividend yield, the more that you'll earn on your investment. Make sure the dividend is sustainable. The final thing to look at when investing in dividend stocks is whether the company can sustain its dividend payments. This is especially important when investing in utility companies, which are heavily regulated and can be impacted by factors outside of their control. Here are some tips for finding high quality dividend stocks. You want to find high quality companies with a history of paying consistent dividends. When investing in dividend stocks, you want to make sure you're putting your money into a company that is both quality and consistent. A high quality company is typically a company with a strong, sustainable business model and a history of paying consistent dividends for decades. But don't choose dividend stocks based on a high yield alone. While it's important to choose a high quality dividend stock and make sure that the dividend is consistent, it's also important to understand the yield. You don't want to get so wrapped up in the dividend yield that you choose high dividend yield stocks because some of them are not sustainable. Make sure to diversify your portfolio. A great way to make sure you're not investing in dividend stocks that are overly risky is to diversify your overall investment portfolio. It's important to not put all of your eggs in the same basket. Make sure you're spreading your money out among different types of investment options so that you're not overly impacted by the performance of any one stock. Let's go over some warnings about dividend stock investing. Only invest in companies with a history of paying consistent dividends. Again, this is kind of a no-brainer, but it's important to remember that you'll want to make sure the company you're investing in has a consistent history of paying dividends. Look at the real-time yield. It's also important to make sure the dividend rate is sustainable. A lot of dividend stocks that have high yields are due to them being unsustainable and will likely be cut at some point. Make sure to look at the real-time yield and not just the dividend rate alone. It's important to not get too excited just because of a high dividend rate. Dividend stocks can be an excellent way to grow your wealth, especially if you reinvest your dividends to create that compound interest. It's important to do your research in finding high-quality companies that are paying out consistent dividends with a proven track record. You also need to know that the company has a sustainable business model so it can continue to pay out dividends, as well as if the company is growing so it can pay out even higher dividends in the future. As long as you're choosing the right companies to invest in, dividend stocks are one of the best ways to grow your wealth over time.